PNB Housing reported its earnings for the first quarter and its profit went up by about 11% and the net interest income had an increase of about 45% on a YOY basis. Margins also stood strong at about 3.14%. Disbursements, however, came down by about 22%. So to help us understand the numbers better, the management of PNB Housing is here with us. Sir, hi. So your disbursements have fallen by about 22%. And I believe that's primarily on the back of the degrowth in the corporate book, which you have been doing as a conscious measure. So could you talk about the earnings? What led to the growth this time around?
See, what is the stable portfolio of the company which led to the growth? Improving margins, the impact of floating rate interest actually came in Q1 of this year because it takes a lag impact. Plus, I would say our retail franchisee has been doing very well. And they actually grew by about 7% year on year, which is, looking at the macroeconomic indicators, that's commendable what they did. And obviously our corporate finance disbursements, if you were to compare Q1 of the previous year with this Q1, grew by about 82% because we are only honoring our past commitments. We are not acquiring any new loans on the corporate finance portfolio. So that was a strategy on which we were working right from actually Q4 of the previous year because we could foresee what was in reserve for 2020. And the focus throughout this year will be on retail loans, whether it is retail housing, retail loan against property, and we will honor our past commitments on our corporate finance, but we will go slow and at least up till Q3 is what I can say in acquiring new corporate loans and disbursing new loans. So that will remain. So it is quite a BAU, business as usual at PNB Housing, that this is a year of retail, this is a year of consolidation, this is a year to get a little bit of tier 1 capital in so that we are fueled up for our future growths. And I think our margins, our spreads, our NIMs, our profitability is going to be pretty, I would say, sustainable in this financial year because whatever tweaks we had to do, we have already done. This is a time now to execute, and we are good at execution. So I think we are going to coast the year as per design.
So while you're not acquiring any more corporate loans, but the existing book that you have, how is that performing? And was there any asset quality issue this time around in that book?
Okay, so we had mentioned 7 accounts in our annual earning calls on our corporate finance book which was stretched. 5 were stretched and 2 were NPA at that point of time, worth about 30 crores. Now, out of those 5 stretched accounts, we have really a very smart task team headed by 2 executive directors. They are working. And out of those 5 stretched accounts which were not NPA as of 31st of March 2019, one of the accounts we have allowed to forward flow worth about 150 crores into the NPA bucket. That is why our NPA number has also gone up, because we want to bring the promoters on the table for a resolution within the financial year. So we are not waiting for the end of the financial year or the mid of the financial year. We have started our job right from actually Q4 of the previous financial year on these 7 accounts, and I think by Q3 we will start seeing the resolutions on these 7 accounts on the corporate finance book. So that count has not increased, and we are monitoring our corporate finance book outside these 7 accounts, and that is performing all right. Now, whether it is utilization, whether it is stage of construction, whether it is sales velocity, collection efficiency, escrow discipline, litigations, etc. So there are a variety of vectors on which we monitor projects at different stages during the life cycle of a project. So they are doing all right till now.
Okay. So, sir, you actually recently raised funding from IFC as well, $100 million. And in the quarter gone by, you also raised about 11,500 crore rupees worth debt capital. So, with all this money coming in, yes, you do need to raise your tier 1 as well, which has already gone up to 12% versus 11 at the end of Q4. So with this additional funds that you are raising, what would be the target growth for the coming year?
Well, I cannot give a forward-looking statement. It's a listed company, but I would say that our growth rates both at AUM level and portfolio level are going to be smarter than the industry averages. And you very rightly read, what we are doing. Thank you for that. That we are doing a capital raise, even though our tier 1 capital is north of 12% now. Our CRAR is north of 15%, but we are doing a capital raise to fuel our growth. Plus, we are doing making a lot of efforts on debt capital. We have raised about 11,000 crores in quarter 1. In beginning of quarter 2, we have done this IFC ECB. This is actually the beginning of the ECB trail. You will see more news on that, good news on that. And so we think that our average growth rates at AUM and portfolio levels are going to be far, far smarter than the industry averages during this fiscal. I'm quite confident on that.
Sir, I want to focus a bit on the asset quality. The gross NPS did see some inch up from 0.43% last year, same quarter, to about 0.85%. And considering the stress in the real estate sector, so how do we expect your asset quality to pan out? And even though a large part of your book is retail, but still construction finance is about 17% of your book. So is that going to pose any sort of risk going forward?
Okay, on the NPA, what I would say is, if you shave off the forward flow of 150 crores on the corporate finance in this quarter, which we deliberately did it will be at about 0.65%. And that is quite okay, because, every time during quarter 1, we allow forward flows of about 20-25 bips so that we can enact the SURFACE Act, and by the end of quarter 3 and beginning of quarter 4 we start the resolutions. So I would say on the retail front, I don't think that we are going to come across any major stumbling block. On the corporate finance, the good thing is that the number of accounts which are which are stretched are not increasing, and I don't think during the year that will happen, because we are very closely monitoring our corporate finance book of about 17,000 crores. And as I said, our entire team, which is today not focused on acquiring, underwriting, delivering new loans, is focused on monitoring. And I think that is helping a lot. Out of the 167 unique relationships that we have in the corporate book, about 45 relationships we have already met in quarter 1, so that we give them our sort of reading of their projects and the financial health, and partner them to sort of coast through this difficult time along with us in a manner which does not hurt anyone.
So just for my knowledge, would you have exposure to some of the names which have been stressed recently, like or which have been in focus, like Omkar, Lodha, Supertech, Vatika, Embassy, etc. And geographically, sir, when it comes to your construction finance book, where are you focused? Is it in some stressed regions of Delhi NCR and some pockets of Mumbai which have seen stress when it comes to the real estate segment?
Well, so the breakup of our corporate finance book is 40%. So we are only in the major cities. We don't do tier 2, tier 3 cities in the corporate finance. and those are the major 8 cities. About 40% is in west, 30% is in south, and about 28% is in north. Now, having said that, we have 3 strategic business units which sit out of our head office, which we call it a central support office, and the entire team is monitoring their respective accounts. Now, when you took these names, let me tell you, none of the construction finance or corporate finance accounts of ours is an NCLT account. Yes, some of the names that you took, like Lodha, like Supertech, are with us. Supertech is in stage 2. We have one exposure with them, and we are in talks with a private equity fund to infuse more funds into that project. It's a viable project. 70% is already sold. The receivables from the sold itself are about 650 crores. The project just requires about 90 to 100 crores to finish and deliver. It is about 75% completed. With Lodha, we have had no, I would say, stretch or stress in our total innings of 8 years experience. We have had 3 loans in the past which were repaid before time or on time. Even the 2 facilities current that we have, they are running spectacularly well. There's a 0 DPD, and we are not finding any sort of, I would say, concern, whether it is construction stage, it is sales velocity, it is collection efficiency, or adherence to the norms of RERA and the local laws. So I don't think, from the various names that you gave, we have only 2 with them, 2 of them with us, and they are performing all right. And with Supertech, we are in very advanced stage with a private equity firm to infuse that 100 crores to make that project deliver, and we will be out of the woods there also.
All right, Mr. Gupta, I would love to know more, but I'm afraid we are running out of time. And I hope those words give some sort of solace to the investors. Thank you so much, sir.
Oh, yeah. Thank you so much. And I wish you a very happy day. Thank you.
Thank you, sir.